A lot of people think traditionally, if you're a business, you have an opportunity to grow, you need a little bit of capital in order to do that. You go to a bank, especially if you're a strong, viable business. Why was there such a gap in the availability, and what's the situation like today? Has that improved?
No, it hasn't improved. It's probably worse than now. But everybody used to think, people would just assume that everybody that owns a business has got a lot of money. Well, they would assume that they just go to the bank and it takes 2 or 3 visits and, you get a loan for $20, $30, $50, or $100,000. Well, that's, as anybody that's in the small business space knows, that's probably the farthest thing from the truth. If you're a business that has 5 years of profitability, you've got, you're a homeowner, you got a great credit score, you've got financial statements prepared by a professional accounting firm, you've got a business plan, you can probably get money from a bank. But if you're a smaller, family-run or new, and we do loans for a lot of new companies, and new, I mean, less than 2 years old. A small retail shop or a small construction firm or home services or you name it, if they're relatively new, they don't have a track record. And so the bank won't even talk to them. You need to have 3 years, 5 years of profitability before they'll even consider it. And if you are profitable and you do have a good business, but you're only doing, say, 20 grand a month and you're only looking for $30,000 to $40,000, the banks really aren't interested. They'll try and sell you a credit card. So the amount of time that it takes for a bank to approve a loan, it's not worth it for them. Nothing against the banks, but it's thank God they're like that, because I wouldn't have a job if they weren't. But they're just really not interested.
How are you and other fintechs able to provide those loans without requiring that mountain of paperwork? How can you sort of provide loans sustainably where banks have said that that's not a good business model?
Well, the rates that every single online lender charges are a lot higher than the bank. So there's that. It's an expensive, you pay for convenience, you pay for speed, you pay for flexibility with an online lender. So that's one of the reasons we've been able to do it. We charge a higher fee. The mountains of paperwork don't exist in companies like ours and all the other lenders that Smarter Loans has on their platform. The fintech part of it, or the automation part of it, has really made the process a lot faster. Like I said, half a day. There's not a whole army of people looking at the file. There's 1 or 2 underwriters, and then perhaps a team of people that give it the final okay. So the speed is highly productive. It doesn't take us forever to do a loan, so we're not spending a lot of time and money on the underwriting process. We charge a bit of a higher fee. That's why this whole model exists.